everybody, I'm hoping you're having a great day in the great state of Idaho, and it's going to be a beautiful weekend. I wanted to go over what the Federal Reserve today because I'm already starting to see lenders out posting on social media that the Fed dropped 50 basis points and rates are improving. That's not true at all. So I'm going to go over a little bit on rates, and we'll talk about what the Fed did today, and then I'm going to talk about what the Fed should be doing or where rates are going. So first of all, the Federal Reserve dropped the Fed funds rate by 50 basis points. That does not have any direct bearing on our mortgage rates. So what our mortgage rates are is our mortgage rates are bonds, so stocks and bonds. Stocks and bonds are always forward looking. So they're always buying on the rumor and selling on the news. So when the rumors started to come out that the Federal Reserve was going to start cutting a quarter point to 50 basis points, the bond market already starts pricing that in. And over the last 30 to 60 days, the Federal Reserve, or the stocks and bonds, the bond market, which is what we're looking for, has already cooked that into the book. So what happened today is the Federal Reserve then said, oh, yep, we're going to cut 50 basis points. So as anticipated, then rates actually worsened today because they're selling on the news on it. So we anticipated that the rates would more than likely worsen today. And as you can see from this chart below, rates actually did worsen today. So this is rates, and it is 2:15, so they are still trading. So this little guy is probably going to go up and down as we talk. These are 10-minute increments, and red is good, green is bad. And as this chart goes up, rates actually go down. So we can see right now we are trading in the red at 19 basis points, which means rates actually have gone up about 8/100ths of a basis point. So the rates have actually gone up today, and that was anticipated on it. So what's happened over this? So if we look at a 3-month chart here, we can see that probably the best day in the last 3 months to lock rates was right here, which was September 10th, which was, what was that? That was last week, right before Consumer Price Index came out. You can actually see this was a great day, but then the next Monday was unemployment, or next Friday was unemployment numbers, and it just crashed out. So you can see that this is the anticipation that the Federal Reserve is going to cut rates. Now, what would have happened today if the Federal Reserve didn't cut rates? Well, interest rates would have gone up dramatically, and we'd be back down in here. Or what would have happened if the Federal Reserve cut 75 basis points? Well, then we would have been trending a lot better off. So this is when the Federal Reserve initially announced it. That's just their piece of paper coming out and saying, hey, we're going to cut rates. And you can see that it spiked and rates improved for 10 minutes. And then they come crashing down. And they've come crashing down. And now they're, like I said, 19 basis points worsened today. So what do we think is going to be the future for interest rates? Because the Fed says they are anticipating another half-point cut. The betting man right now is 93% of that. 93% think that cut's going to come in December. And what's going to happen is between now and December, we're going to have 2 unemployment numbers. We're going to have an election. We're going to have a consumer price index. So I anticipate over the next couple weeks up till the unemployment number, which comes out October 4th, I don't think rates are going to do anything much. We're probably going to trade in this band that we're trading right now. Then as unemployment numbers come out, consumer price numbers come out, they're going to start cooking that half a point basis point. If those numbers are bond friendly, are going to start cooking that into the rate. And then we'll probably see it maybe right after the election. I think they're going to hold off on major announcements or major rate movements till after the election and see what chaos ensues there. But then after the election, I think if the numbers look good, they're going to start cooking in to the books that next rate cut, 50-point basis cut. Now, that doesn't mean our rates are going to come down 50 basis points, but we'll have to see what the traders are. So kind of the moral of the story is the Federal Reserve cut 50 basis points. They're fighting inflation, which is good. Inflation is bad for bonds, but bonds are always forward looking. By the time the rate cut comes, it's already cooked into the books. So if you see lenders out there that are touting, and I'm seeing them, that mortgage rates have dropped and the Fed cut 50 basis points, they're not being truthful with you. The moral of the story is rates have worsened by 16. The rate has worsened by 16 basis points, which is about, maybe 0.05 now of rates. And we'll see what December brings. As always, if you ever have questions about rates, give me a call. We'll gladly. Oh, look, we spiked to a little bit of a green today. Nothing much happening there. Thank you. Make it a great weekend.